are with us here tonight as we go through. The purpose of this was to provide a Bitcoin mining market update. We've got Taing of Tozy Capital here, and I'm Ryan, Mckenna Capital, and we wanted to just walk you through what we're seeing and just give you an update and use this time to answer any questions you might have. And there's a Q&A box that you can ask those questions in, and I'll try to monitor that as we go along. I can reach out and we can ask those questions to Taing and get some answers here. So with that, Taing, I'll let you take it over here and get us going.
Thanks, Ryan, and I appreciate everybody joining us tonight. Today, we're really going to talk about what's happening in Bitcoin and provide you guys an update on our fund and some interesting potentials that we're looking at. We've been working, Ryan and I have been working very hard on this. I'm very long-term bullish on Bitcoin, but I want to provide some people some context of what I've been thinking, that especially with the crazy market over the last 4 or 5 months. I think the last time we had a webinar was somewhere in March. This is long overdue. So I'm just going to leave this slide up, and I think this can. Yeah, I've had some asset update reports that I shared with Ryan and I shared with you guys. Obviously, Bitcoin has been going down or went down, and it's been trending up. And if you bought the dip, congratulations, you're up close to 25, 30%. But I want to highlight why that happened and how that impacts miners specifically. I call it a contagion effect, or really a butterfly effect of over leverage. And this isn't just related to Bitcoin, but it's related to everything you guys hear out there with Celsius, with Terra Luna, with all these other crypto assets that were leveraged and cross-collateralized against each other, that effectively created a domino effect when the price started slipping below around 40K. I remember around May, we went to Bitcoin conference in April. Bitcoin is going down slightly, but Terra Luna was buying significant portions of Bitcoin. And when their crypto asset valuation went down, it started to create a forced liquidations, which had a spiraling effect on many other positions. What that means is when you lend on a DeFi protocol or in crypto land, it's not like lending money in real estate. When you lend money in real estate, if the price of your house goes down, as long as you pay your monthly payments, they're not going to force liquidate your house or your apartment building. But with crypto, it's automatic ledgers. They know the price and they know your LTV, your loan to value. And so two things go into loan to value: the value of the collateral asset and the loan amount. And if people were loaning at 50% and the margin was really at 70%, when the price of Bitcoin or the collateral asset goes down by 25%, as it did in May, and then subsequently significantly more, and that created a lot of forced liquidations. People weren't wanting to sell Bitcoin. They used Bitcoin as a collateral asset to loan against, to buy other riskier assets in crypto. I always think of crypto as a liquidity sponge. So one of the major trends that has happened over the last 4 months really has been highlighting that there has been a ton of liquidity in the market in the past 2 years, and that's drying up. That's drying up because interest rates have gone up, because CPI has printed very high, close to 8.5%, 9% the last month before. These are all actions that the Federal Reserve is focusing on to essentially ensure inflation gets under control and that employment keeps low, employment rate keeps low or high, which is true. These things happen. But in how that has affected Bitcoin markets really has been two ways. One, there has been a lot more forced sellers. When that happened, a lot of miners who were over leveraged became forced sellers of Bitcoin. They were hodling their Bitcoin in April, May, March, February, when Bitcoin is higher. Unlike us, we sell Bitcoin every month. We run a profitable model where essentially, even if the distribution is low, we sell Bitcoin regardless if it's at 18K, 22K, 40K, 50K. That's been the model for all of our fund, which allows us to essentially make sure we don't hold any debt as well, and we're not necessarily trading the market. So that big systemic impact has really been the story the past few months. That does provide opportunities. The big opportunity that it provides is with difficulty adjustments. And when I started to present this investment initially, we talked about two factors that really impacts the returns. One is price, and that has a very dramatic impact. To note, with price being around 23.8 right now versus 19.6 last month, you're going to see around a 75% increase in distributions. Now from a very low bar, admittedly, but still, it's that sensitive at these levels. And of course, Bitcoin goes up to 25, 30K. Again, we're looking at a very significant return still. But one thing that I highlighted was when Bitcoin price goes up, difficulty goes up more because it's just more profitable. And the inverse, which admittedly, I didn't see this so significantly come against us. When it goes down, difficulty goes down too. What that means is there's less competition and we should theoretically mine more Bitcoin. What this really impacts is my model has been forecasting a 4 to 6% increase in monthly difficulty, which means that 4 to 6% more miners are out there in the world. Now it's been the case that down by 3 to 4% a month, although the last difficulty adjustment went up. I want to highlight this graph because miners are still mining Bitcoin. The average cost of mining Bitcoin, if your costs, if you have really good energy price and really energy efficient miners, is around 14,000. Ours is slightly higher because we have slightly higher energy price, but we are working on solving some of those issues as well. What this means is miners have been pretty profitable and they continue to be profitable. They're just not as profitable as before, which means that they're not necessarily going to invest more capital, invest more to expand, and that means less competition going forward. That doesn't necessarily mean that everybody's going to unplug right away, although in this graph that in the orange line, that a lot of people did unplug right away, especially the unprofitable miners that had very high energy costs or the very energy inefficient miners. So that's been a trend that's been with us. And I think we'll probably see, if Bitcoin stays around this level for a while longer, we'll probably see some flattening of difficulty. What that means is people just won't be investing that much more into Bitcoin mining, meaning that the aggressive growth that everybody has been talking about is going to plateau a little bit. So I also want to discuss these are pictures from a recent trip, Ryan and I and Sean and the other Ryan at Granbury, Texas. I know everybody's anticipating our 6,000 miners to arrive and land in Granbury, Texas in Roof Hollow at Compute North. 2,000 have already been sent there. It's been installed, as I've been informed as of yesterday. Electrification is really the next step. So they're trying to essentially, we're probably going to be the third or fourth largest client at their site. And so they only recently received ERCOT approval earlier, I believe last month or end of July. And they're still waiting for finalizing some wires and electrification. As of today, as Compute North texted me this morning, electrification should happen end of the month towards across to September. So I'm hesitant right now to say a definitive online date. All I know is that we're making sure that as soon as anyone turns on, we're going to be turned on, and that we're going to be prepared to mine Bitcoin, which will essentially increase our mining capacity by 4x from now. So we have 2,000 miners, 26,000 miners online, so 8,000.
Yeah, that'll be nice because I know that's what we've all been waiting for to get everything up and running. So we're getting closer to that phase of the Bitcoin mining fund. So we'll be anxiously awaiting further details on that timing.
Yeah, I want to share a drone video that we took together for everybody to see the site. So you can see that this is in a natural gas production site. It's 600 megawatts of capacity. I believe it's actually potentially a federal violation of me taking a drone down. That's what they told me. It's national. But this was taken in earlier the year, so it wasn't fully built out. But these are the containers. These are where our miners have been hosted. And you can see that they're being installed and they're parallel this way so that you have good airflow. goes out, cold air goes in, and there's transformers in each one, essentially getting the electrification into each container, where 520 units reside in each container.
Hey, Aang, real quick, the video isn't playing. I don't know on your end if it is, but
Oh, is it not playing?
No. Oh, there we go.
Was I just talking?
You were talking, yeah, and it was still just a kind of a standstill image.
Oh, is it playing now?
No, I'm not seeing it. Okay.
That's okay.
Yeah, I don't know if it was just frozen or. I hear the soundtrack you got for it, but. Maybe we can share the. Oh, it looks like it's going now. Okay, yeah, it's working now.
Okay, do you see it?
Yep.
Yeah. So sorry for that, guys. That's the power generation. So with Bitcoin mining, you want to be close to power. This is sort of in southwest of Fort Worth or Dallas. Ryan and I visited a few months ago, and I would have gone this week, but I did have one of my crew go there, and they said that everything's on track. And so these are the containers that our miners would be in. 520 per container. Will have a significant portion of these containers. And this whole power plant generates around 600 megawatts of power. And the power plant actually has a material interest with Compute Nerf in this site. So they're very much incentivized to make sure that power is coming in, and we will be hatching soon. Sorry for that. Do you guys see my screen now? Am I playing with thread?
Yep, we're good now.
Okay. Okay, and so one of the updates that I shared with Ryan recently was that our investor portal is down, and that essentially our previous developers parted ways. We parted ways with our previous developers. So over the past 2 weeks, I've been working on developing a new portal, slightly simpler. We won't go the same process of the last one. We'll have essentially all the data that we had previously, and we'll be sending an invite to everybody to sign up to the portal so that you can make adjustments to your Bitcoin preference. My commitment is to have this done by the end of the month. And I have controls now to that this thing that happened before, it doesn't happen again. And so we'll have full control of this portal, unlike last time. But we'll use this portal to continue to build and create visibility for everybody in terms of the historical accounting of distributions, allowing them to do taxes pretty easily, as well as understand what their Bitcoin wallet address is they're using. And we're forgoing some of these test sending methods. I think that was a very arduous process of, hey, you send us a wallet, sending you a test 100% of the time. If it was a real wallet, no one ever said that this wasn't, I didn't receive it. So we're forgoing that. We're going to trust you that what you sent us is a real wallet, if it is. Some people still send us Ethereum wallet addresses or their Coinbase account address, which is not really an address. But to the extent that we have your latest information, you can change it, and we can augment it every month to make it a little more simple.
And one more thing just to add, this is regarding the investor dashboard, right? Not the Syndication Pro portal.
Yeah, the Syndication Pro portal is working. There's no issues with that. The reason why we have an investor dashboard at all is because we have a lot of Bitcoin mining investors, and our Syndication Pro portal doesn't accommodate adjustments in wallet addresses easily or at all. And so I wanted to make sure people can provide us your wallet address and then see what you guys put, because that's also very important. Because over the past 4 months, when news of Celsius pausing withdrawals and Voyager and other lending protocols, people had their previous wallets targeted at those sites. And we don't want to just say, we're going to send to your wallet that we've always had. You should be dynamic. It should be your Bitcoin, and a very big proponent of being your Bitcoin. So the Syndication Pro portal is, and we're going to definitely continue using that, and we're going to put some actual historical distribution records in there as well. Something that we haven't done in the past, but we have all the accounting for that.
Yeah, and this investor dashboard was a custom portal that we had to build specifically for the Bitcoin mining fund. And yeah, there's just been a few tweaks here and there. So be a little patient. We'll get through this. And the second one should move a lot faster and work better as well. Yeah, we appreciate it. All the insight and kind of the latest with that.
Yeah, and we will, in terms of distributions, because we don't have this portal ready, and the amazing thing about the last portal, it's sad that they don't have it anymore, is that it created an automatic API to our bank account which we changed our bank account to Mercury, which allows us to send essentially payments, automatic payments. And you can imagine that we have close to 1,000 investors in Bitcoin. So sending money every month was very difficult at a very manual level. But I'm committed to continue to explore that avenue to send automatic payments and so I'm just making sure that our accounting is very firm. We have everyone's information very correctly, so without making mistakes. But we've mined up Bitcoin. We're gonna probably publish the report of how much we mine and the distribution returns this week, end of this week. And then as soon as we have everything ready, we'll probably send Bitcoin in a few weeks. So just, I appreciate everyone's patience this month. And I know that our team is working very hard. And for those who don't know, who have interacted with Ryan Beatty and our team, he just had a baby, third baby. So not sure you know that, Ryan, but that Ryan has a baby.
I had heard, I knew it was getting close, but yeah, I think my brother had said something the other day. He was texting with Ryan, so that's awesome to hear. And I'm sure it's been a busy time for him right now and his family.
Yeah. So I want to end there with one last slide, and I think this is something that I've been talking to Ryan Mckenna about for a while in terms of what it would look like if we had a merger and a potential exit. Because I'm always thinking, yes, the investment that we have made together is one of creating as much Bitcoin as possible and sending it to you, and in the form of cash or Bitcoin, and it should be monthly. And we're working through that process. We make sure that's all very much automated, and we're very close to that. But I've been talking to Blockmetrics for the past 8 months, and they've been wanting to merge with Tozi and its related entities, specifically Bitcoin mining. One of them is Fund 4, which constitutes the majority of Tozi Capital's mining operations. So Mckenna and Tozi mining constitutes the majority. The market has not been pretty good, as we talked earlier, to say the least. But to the extent that a public market exit is one option for a liquidation event and for exit, I wanted to highlight some numbers that Blockmetrics shared with me. And I want to highlight who Blockmetrics is. These are a Texas-based Bitcoin mining company. They're roughly around the same size as us. Actually, we're slightly bigger. And I believe I have more experience in that, but they have more experience in public market exits. Specifically, they used to run oil and gas, and they've had 4 exits, public market exits at $1 billion valuations each. So they're very good at this. It's not something that I have particular strong interest in terms of going public. It seems unnecessary at times. When we look at mining companies and we look at how they're valued on how much production do you have? And we classify as EH, in this case, is exahash, which is 1,000 petahash, which is 1,000 terahash. One miner typically has around 100 terahash. So we have Fund 4 has 661 petahash, 661 petahash, which if you take that multiple and you say we're going to merge with Blockmetrics, and this definitely, in this case, there's definitely value in size. And I have a term sheet, and they keep calling me every week to, hey, you want to merge? They're good guys. And I want to highlight, this is a slide that they want me to show you guys in consideration. Essentially, if we went back to the good old days, the market high of last year, the middle column, these were the market caps relative of each company. And if we merge with Blockmetrics, we would be combined 1.7 exahash. It's not $1, 1.7. And the exit value would be $4.9 billion. Obviously, very speculative, and there has to be a growth journey to that. Today's market you're looking at, this is the market cap per exahash, and because Bitcoin miners are essentially a leveraged bet of Bitcoin, meaning that if Bitcoin moves up more, miners move up a lot more in valuation, typically, if they have a good growth story. And so even at the exit valuation today, again, these aren't my numbers, I need to validate them. I just want to highlight that this opportunity potentially presents itself. Tozy Capital, and I think Fund 4 would constitute a quarter of this valuation or something like that. And then if we went to, and the way that this would actually work, we would do a reverse merger. We would do a reverse merger we would do a merger together with Blockmetrics. We do a reverse merger into an existing publicly traded company that we essentially acquire, and then we'll list as a publicly traded company. And I've previously negotiated for some board seats, although we would have a limited row going forward, which is sort of, we need to understand where that goes. The other challenge would be that it would not have the same benefits in terms of monthly cash flow, because obviously they're trying to create a much more valuable company. They want to accumulate and hold their Bitcoin. But of course, you have liquidity, so you can sell your shares anytime. I don't have as much detail of what that would look like in terms of where there'd be a lockout effect. And my negotiation right now is I wouldn't want to do an exit unless our investors are taken care of and that the market was better. It wouldn't make sense to go public at any point right now. So the last column is really them giving me a nudge.
So Ang, this is something that's obviously hypothetical, but they're approaching the several funds and saying, hey, together with size, we actually can create a lot more value for investors. And in a better market, there's significant upside opportunity for some sort of IPO. Not that we would have to do it, but it's something that has been thrown our way. And I think the purpose of this was really to kind of show, hey, what the numbers look like at a high level. And I guess if I'm understanding this correctly, the potential exit of what, 3 billion, Blockmetrics would be about half of that, you were saying, right? 50%.
Yeah.
So
we're currently
0.5 billion, and then Fund 4, which is a majority of the miners of the Tozy Mckenna Capital Fund, that would be majority of that 1.5 or portion of that value.
50%.
50%. Oh, so you're talking about 750 million potentially if that things were in a better place market wise. And again, this is something that was just thrown our way. I think it's exciting to entertain and to look at and share with investors. But yeah, as far as this just coming up, and it's pretty cool to see that there is a lot of significant value out there. And yeah, I'll let you go through that third column. I didn't mean to cut you off, but I just was trying to just better understand the numbers and the situation and just hone in a little bit more on what that might look like or could look like.
There's certainly a lot of theoretical numbers here. The one theoretical number is what is the market cap of these large Bitcoin mining companies, Marathon, Riot, Hut 8. They're $3.3 billion and hardly valued on a market cap basis. They're valued mostly on a per terahash basis. And so taking our combined exahash, which Fund 4 constitutes around 661 petahash, or 661 of that 1700, and using the same ratio of market cap to exahash, that would be the potential exit valuation. So you're right, Ryan, that would be, yeah. And then 4 months ago, this was a very, very reasonable and solid proposal. And even as far back as a month and a half ago, we've been talking to investment bankers, at least I've been informed, and that they really like the idea of these mid-market companies, which we are classified as mid-market company, merging to create a much bigger competitor for these larger companies. Because the larger companies won't necessarily have the capital or the investment pieces to acquire these smaller companies. There will be consolidation happening in this industry. And so we could position ourselves as in a very good position. I've been arguing with them mostly around, we want to make sure that we get distributions. And so obviously distributions are low. So maybe this should be a thing we revisit.
Yeah, no, I think this, again, the intent was just to show what we're seeing in the market and just this was presented to us, and that wasn't something we sought out. Just when you're growing and doing good things, and sometimes these opportunities come your way, and we wouldn't be doing our fiduciary responsibility here with investor capital if we weren't looking at these types of scenarios that come up. And I'm seeing a couple of questions here that just came in. One investor said, I love the potential merger idea. I've gone through that myself more than once, but obviously more details need to be shared down the road. And you're absolutely right. This is just something that real high level, early stages of just entertaining what might be possible. And as Eng mentioned, when the market's healthier and coin recovers, these numbers could get even better, or at least look more enticing. So that's why I don't think there's any rush right now to figure out a decision, but it's definitely worth exploring, I think, with the significant upside of what this could look like for investors. And you want anything regarding that to add? I know there's another question. What would be the fund for multiple on a $750 million value, assuming column 3?
Yeah, close to 15x.
15x.
It seems very wildly optimistic, but maybe because I'm recent memory. Yeah, I think that the process of that, I don't want this to just talk about this, is really, we wanted to merge before the market roars back up. And I can't predict when that will happen. Their thesis is that around Q1, the market would be much better. And so you want to be in a prime opportunity to essentially capture that growth, and essentially be the first out of the gates when that opportunity presents itself. So they wanted to merge before. I wanted to make a conditional merger so that we continue, so that if the case that markets don't recover, we at least can continue to provide same kind of returns or the same kind of investment structure to. They raised $40 million as well at a $250 million pre-money valuation. Is it post-money valuation? One of those post-money valuation around April. So interesting dynamics that they have as well.
Yeah, let's see. Oh yeah, a response 15x. Let's merge. One other question. It said the original presentation deck stated at $10,000 cost of mining 1 Bitcoin. Did I hear Eng say that it's now more like 15K? Please elaborate on the cost of mining and what it might be after the Texas facility comes online.
Yeah, so that's a very good question. One of the things that has happened since we first presented, and we have been trying to adjust that expectation, because when we first presented in November, it was 10,000 cost of mine. Energy cost hasn't changed. It's the difficulty is really the thing that has changed the most. When difficulty goes up by a certain factor, 50%, you essentially do some less Bitcoin, and your cost is fixed. So right now our cost is around 16K. Although our New York facility is slightly higher energy costs than our Texas facility. So once we're fully online on our Texas facility, and our new miners coming in Texas are more energy efficient. So we would actually reduce our cost to mine by 1 or 2K.
Okay.
Yeah.
All right, let me see. Okay, does Block Metrics have any public companies that are actively traded? Asking as it would be interesting to take a look at any other stock's average trading volume for liquidity.
I'm unsure what the question means.
Okay, I'll read it again. Does Block Metrics have any public companies that are actively traded? So I think you mentioned what they've done, 4 or 5 IPOs in the gas space. And then just asking as it would be interesting to take a look at any other stocks average trading volume for liquidity. So I don't know, are any of those 4 or 5 companies still public, or they have been just, I guess maybe elaborate a little bit more on that.
I can certainly get that. Botmetrics is a new company. It's specifically Bitcoin mining. It's the 3 founders that have taken companies public, and that's their specialty. They're really good at creating the right connections in the investment banking world and the right financial records. And we've been working on an internal audit so that in the case that we want to merge, that we're all green lighted. That's take some time. I can certainly share that with Ryan. That's a good question.
Yeah, and again, this is still very preliminary, and a lot of these questions we'll learn more as we explore things further. But I think the intent here was just to show what's happening in the market, and just we were approached, and we want to kind of look at this further and see what it's all about. And obviously, as we learn more, we're going to share more too. This just came about here, and
Yeah, I think this certainly highlights asymmetric information between public markets and private deals. Right? Private deals, you get better value for the investor. Public markets get less. It is generally true. Obviously, there's really great benefits of liquidity. You can sell, buy whenever you want, you can enter the market. But there's other irrational ways that markets go down or liquid prices go down, and as well as prices go up.
Yeah, let me go through and see if make sure I'm not missing any questions. One question came in. Can you comment on plans for return of capital for both the Bitcoin side and the data center side whenever this project ends? I think for the data center, it's a 12, 24, 36 month term on what they want. And then the return of capital would be at the end of.
Yeah, but Bitcoin side, just as a reminder, there's no specific like lump sum where capital is returned. The capital is used to acquire miners. The miners then are used to create Bitcoin. And our initial forecast was that it would have been 18 months. Now it's probably likely much longer. I can't say the specific time frame. Obviously, that this monthly distributions highlight that it could be much longer. But I think there's certainly optimistic views of this because we're going to have 4x amount of production, as well as, you know, when Bitcoin goes up 3K or 4K, the returns jump up a lot. That's just how the model works.
Yeah, because I know before you were saying even if it goes up 1,000, there's incremental value there in the distribution, and I know it fluctuates based upon the market and the timing. There was one question here on the address of the portal that's still working. I'll have to look that up. It's Syndication Pro. There's a link for that. For our investors, we have our Mckenna Capital portal, but then we also combine with Tozy Capital the Syndication Pro for the onboarding of the big mining and data center funds. So that's a Syndication Pro link that we'll get over to you. Let's see. I think. Okay. Can you send approximate levels of return based upon different levels of Bitcoin, 25, 50, 75, 100K to reflect expectations congruent to the March slideshow, just some basic ranges so that we can have an expectation of cash flow?
That's a great question. And I'm going to do the math right now. I saw that. I would say I'm going to do the math right now, but I'm going to say that we're going to hold everything constant from difficulty. Right? That's the one thing that I can't forecast. Obviously, if price is 100K, I would assume difficulty is going to be a lot higher, which means we're going to be making a lot less Bitcoin. So just modeling right now I'm going to do is not very ideal. When we're at full production, meaning that we have all of our miners online and we have Bitcoin at 25K, we will be around 1.7%. I'm just say the first month number, 1.7% monthly returns. So much higher than today. At 50K, we are using everything constant, which is a fallacy because if Bitcoin goes up by double, typically you expect to go up more. You're at 7% returns, so significantly higher, and 7% monthly returns. Obviously, a little bit of fallacy with that, be like 12.5%, and then at 100K, and this is just 1 month return, right, of the capital, and then 100K is 18%, pretty good. Obviously, all these things are predicated on difficulty being the same, which wouldn't be true if Bitcoin went up that much. But it wouldn't be true that Bitcoin difficulty would go up 4x if Bitcoin went up 4x, because there's just not that much silicon chips and much capital and to speed it. It's like when oil price goes up, you can't drill enough oil. It's a long lead time for this kind of production cycle or capex cycle to be invested and then get that production. Same thing with Bitcoin mining. Especially a lot of people in oil and Bitcoin mining. And the block entry guys are all oil guys. So they have a lot of good connections with the Texas Republicans.
So, Ang, let me just emphasize one thing. You said if Bitcoin got to 100K roughly, we would see 18% distributions per month.
Holding everything else constant.
Yeah, I know that could fluctuate. It could be 15%, it could be 20%, but like roughly, you're talking about numbers that even on an annual basis would be pretty awesome, but that would be on a monthly basis. Correct?
Yes. Yeah. And it really just highlights how, I'll be honest, when Bitcoin crashed to 18K, I was certainly concerned. Our profitability would be very negligible, but it highlights that when Bitcoin was much higher, profit margin was very high. You know, our fixed cost is fixed costs. It doesn't increase if Bitcoin goes up. It doesn't decrease if Bitcoin goes down. So our profit margins obviously play a big factor into Bitcoin price.
And then a follow-up question to that. Do you have a current expectation of shelf life of the current equipment? In other words, how long can we mine with this equipment?
It depends. There are, in our first fund, we have lost less than 1% of all equipment. And that's been going for more than a year. But I have miners that are 6 years old that are mining. These are personal miners. Most analysts think that most of their most recent Bitcoin miners last 3 to 5 years. But there's no historical evidence that because they all were released in the past year.
Okay, let's see. With the Bitcoin price, we're still making money, right? Just a slower return of capital. Is that correct?
Yeah.
Okay.
Yeah. And I hate selling Bitcoin at this price. The model of our investment is to run a profitable go forward business. I know lots of other Bitcoin miners are more about reserving capital, having capital for OpEx. Our model is very different. It's about running a go forward profitable business, just like any other cash flowing business.
All right. Is there an estimate on the total number of miners we expect to have online when Fund 4 is fully up and running? And then is or will that total miner number change based on getting access to miners more cost efficiently?
8,000. And yes, one of the things that I'm looking at and exploring, I was talking to Ryan earlier, is trading some of our miners with more energy efficient miners, which would be more expensive. But efficiency is the name of the game today. When Bitcoin price is higher, it's more about productivity and efficiency, but yeah, getting our efficiency low would increase our returns in general.
Okay.
And obviously there's some really great opportunities to buy from distressed miners that did over leverage, like Celsius. I had a call with them this morning. I want to highlight one thing. They want to buy half of, I'm not going to sell it, half of our Texas capacity, and we would be making around 100K a month from that sell just for 5 years, just because we have a good contract. It's like we bought the contract. The value of this fund, some significant portion of that value is our really low cost contract.
So even though like it might feel like things are tough right now and we're dealing with just a macro economy that's just kicking us in the teeth, we're in a good position with the fund and our purchase price, everything we've going for us, especially you look at like block metrics reaching out and just the numbers there, the multiple. I think what you just shared really highlights it's a good place.
I'm long-term bullish on Bitcoin, but I'm also short-term bullish on this investment. I'm really bullish on this investment because our costs to mine, yes, it's higher than expected, but our average price that is needed for us to return capital over the next 5 years, say Bitcoin price was 29,000 for the next 5 years, just flat, we would make enough returns to return everyone's capital, holding everything else constant, which just highlights that when we bought these miners, Bitcoin was much higher than 29K. It was considerably higher by like double, more, a little bit less than that. But if you bought Bitcoin back then, instead of investing in this fund, it would be impossible to break even if Bitcoin stayed at 29K forever.
Let's see, another question here. Can we still expect a 6% dividend at the end of the year for the time capital was committed and the beginning of mining activity?
That's the current plan right now.
Okay. Is it likely that chip shortages and or supply chain issues materially impact new miners coming online from a global mining capacity perspective?
Yes. Yeah, that's already happening. And that's shortened supply. That's created a little bit of floor for mining. There's 3 axes of what drives Bitcoin mining economics. One is power, miners, and capital. Those 3 things drive Bitcoin mining growth. Capital was very abundant last year. That's why a lot of people bought Bitcoin miners at $10,000 per miner. And if they leverage at 60% or 70%, they're underwater because those miners are worth $3,500 to $4,000. And so that's why they're selling. A lot of miners are selling a lot of Bitcoin. This year, very little capital is happening. The second is miners. Miners continue to be something of a restriction, but there's more miners out there. So it's actually really great deals. Unfortunately, there's no capital. The third thing is power has gone up with the war in Ukraine and has continued to be a very tight supply in terms of hosting capacity. And that's why you're seeing miners pay 7.5 cents to even 8 cents at a very large scale. Not talking about like small retail guys. I'm talking about big industrial miners that are larger than us paying 7.5 cents or 8 cents to host their miners, because that's just to save the market with current restriction. So we're very lucky to have our current capacity.
Yeah. Question here, any future funds in the works?
Not yet, but I see so many great opportunities that I wish I could launch a future fund. My goal is to deliver the full capacity of this fund, as well as really my biggest stress hasn't been really Bitcoin price. Yes, that's part of it. It would be easier if Bitcoin price was higher. But my biggest stress has been delivering the investment experience of giving you guys Bitcoin every month. And because of the portal issues we've had, the development issues we've had, that's just been slowing down. I'm very lucky. I think we're going to be close to resolving that in the next few weeks. And then potentially then I think it would be a great time to think about launching a new fund.
I think you covered this, some of the drivers behind the higher cost of mining. I know you were sharing about kind of the current state, but I don't know if there's anything more to elaborate on that.
Yeah, the largest drive force of mining is that energy price has gone up as well. Some people who have not gotten fixed contracts had the energy price go up. Our facility, our New York facility, for example, our cost of mining is 6.35 cents. Their costs on 7 months have exceeded that. So they're unprofitable. They actually really don't like me in terms of like our contract right now. But that highlights that for our Texas site, natural gas has gone up. That's the basis of energy price that is generated from that site. They locked in their futures contract for the next few years. I'm not sure it's true. I think it's like 2-3 years in early April. So relatively mild time in terms of energy costs, because right now it would be significantly more, probably around 30 to 40% more in energy price if you try to do the same kind of contract. So we have some advantage of locking in time basis. We signed the contract in October for that really juicy sub 6 cents contract.
Great. Here's a question. If the merger were to happen, does each investor have to make a choice on either staying in the fund or exiting the fund?
It's a great question. At one point, I was thinking, should I give everybody the option to merge or to exit? I think when I say merge, to merge with Blockmetrics or to stay with the fund as formulated and get the monthly returns. And because it's all these atomic levels of, hey, we can just sell 6,000 miners or merge 6,000 miners and 2,000 retains if 25% people don't want to move. I think it would just be too administratively burdensome to not do it all in unison. So I wouldn't want to do it. I think that was the question that you asked. If the question is, does each investor have a choice to exit when you merge? Then yes, because you guys would be getting shares of the new company.
And you're saying that they could sell those shares to extract the value, assuming that there's not like a lockup period, which in sometimes these mergers, there could be what, like 12-month lockup period or 6 months, or is that?
Yeah. I think with a reverse merger, this approach, there wouldn't be a lockup period.
Yeah, these are a lot of great questions and obviously new to us from the standpoint of what that looks like. It's obviously very exciting to hear and to have other companies that really like our business model and what we're doing. And as kind of manager of the fund, we want to explore and see what this is all about. And as more progress is made, more questions get answered, certainly we would love to share an update, but this was something just more FYI. Here's what the potential is of this. And we want to just explore it a little bit further to see what it looks like. And I'm sure we'll have probably another update when we have more information, but this is something fairly recent. And we didn't want to have this be where we have share all the details on it, because it is something that we're still uncovering and learning about. And obviously we have questions too, but certainly we want to keep everyone informed. And this isn't something that overnight a decision is going to be made. There's got to be some time to evaluate what this could look like. And or maybe it doesn't make sense. We want to at least look at what's being presented, and we'll definitely share more as we have more along the way.
Yeah, one thing to note that the two sticking points that for me has been distributions. I wanted to make sure that we continue to make monthly distributions to investors, and tax advantages. We're structured as a pass-through investment entity. You get all the tax advantages as that. For our investors in earlier funds, they receive a significant tax advantage. I am not so sure how that would work with this merger. Gap rules, I believe they're using, I'm not sure they're using a 3-year AM period or 1 year. I suggest they use 1 year, but I don't know how it would work specifically as a pass-through investment versus, I'm not happy if anyone knows the answer to that.
Okay. Oh, here's, can we put more money in the Texas site with the current Bitcoin mining fund? It's a question that just came in.
I think the Bitcoin mining funds, all Bitcoin mining funds should be closed. If they're open, that might be a mistake.
There might be something on the portal
yeah.
that hasn't been closed out, I'm guessing.
But if the question is, if can we put more miners in the Bitcoin mines in Texas site, I've asked repeatedly for more capacity. They don't have anything.
Yeah, could you maybe elaborate a little bit on just part of, I'll just say, if we did have another fund, like part of what goes into this is like the capacity for us to deploy those miners. And that has to factor into, does it make sense? Is there going to be a huge delay? Or maybe there's an opportunity that comes along that's we can slide right in. And I think that's a possibility too. So I think maybe just elaborate a little bit on something like what that could look like and some of the factors that might be involved if we were to look at that.
So there are 2 opportunities that I've been looking at and run in even applications that we haven't had a chance to talk about it. One is buying a considerable amount of miners that are already hosted. So these are called turnkey miners. So we wouldn't have sort of the same issues moving miners, buying miners from Asia, logistic supply, waiting for sites to turn on, those counterparty risks and just logistics issues because they are plugged in now to turnkey. They would be essentially buying a considerably lower cost basis because they're in a distressed asset situation. And we're essentially picking the best assets of that thing. And so
you're saying like some of these mining companies who have used leverage to acquire a bunch of miners and they bought it at a higher price when Bitcoin was higher. And now they're like, hey, we want to get out. We're willing to sell at a discount. So we could come in and scoop those up at a pretty low cost per Bitcoin miner. Right?
Capital is king right now. So obviously, if you have capital, you can make a lot of great deals. So that's one deal that would be very attractive because their cost basis would be significantly less than even the other aspect is because as I continue to create, I'm working with these major public companies. I was one point thinking if I should buy them, but one of them had a really great business model, signing PPAs directly with their renewable energy source, Soluna, and they want to merge, not in the same way that Blockmetrics want to merge, but want to merge and acquire miners. I have an opportunity to acquire a fairly large, substantial size of miners. I have financing lined up to if we want to go forward with that. Ryan, we can talk about this later. I literally got this yesterday, and it would be something where it would be a little risky because obviously it has leverage on it. But the bank would probably approve it and would essentially allow us to buy a very large minus distressed asset. You would probably know one of them. I presented them in the slide earlier. And then we would build our own site, which I'm looking at 2 sites right now in Arkansas and in Kentucky. These are regulated markets. So it's much easier to essentially get approval because energy price is the same. You get economic development rider, which allows you to get sub 5 cents power. And we would, at this point, I'm confident enough that I have the resources and the understanding to then build our own operational team. So we're not left reliant necessarily on other counterparties like Compute North to host ourselves.
Yeah. So I think as I'm hearing you, there's opportunity out there, certainly, and it's just a matter of, does it make sense? What does timing look like? Sometimes I know these opportunities fall in your lap too, and it's more opportunistic. And I think I'm right with you as far as making sure we have the best experience with the current fund and getting that up and running. And as these other offers come along, it's great to entertain them. And I think at some point we could seriously consider some of these opportunities and potentially even another fund of maybe some distressed miners. So I think there's a lot of exciting things happening, but the main thing is we want to do the best we can with what we're currently operating. And despite it being a challenging market, I think we're doing everything we can. And we've had a few bumps in the road with some technology and things like that, but hopefully we'll work out all those kinks and we'll just get better and continue to keep pushing forward. And we'll get through this, and it'll be hopefully a great experience at the end of this journey here.
Yeah, I think a lot of the issues we've had obviously is outside of control, and I really appreciate everyone's patience as we go through this new portal. But as I highlight with that merger slide and with these opportunities, I'm very bullish on Bitcoin and investing in Bitcoin mining. I think it's a great investment, and I think there could be some really good opportunities fairly soon.
Great. Thank you for this update. This was really nice to have you walk through everything in more detail and just share more on the current Bitcoin mining state of the market. And we appreciate all the investors who joined us here live. You guys asked some great questions, and we truly couldn't do this without you. So we really appreciate the partnership here, and we're going to continue doing the best that we can. And like I said, we'll get through this period now, but I think the future is very bullish. I'm very bullish on this fund and the opportunities we're going to have. And it's just a period we'll get through this short-term kind of turbulence. And so, yeah, if any other questions come up, certainly you can reach out. We have this recorded for those investors who couldn't be here. And then we'll keep you posted too with things that might come up down the road that we think would be attractive, or something we might want to put together or look at acquiring regarding the Bitcoin mining space. I think there's some opportunities that might make it very attractive to pursue. We'll do that, and we'll keep you informed. So, Taing, again, thanks for your time, and thanks to everyone else who joined us here tonight.
Thanks everybody for joining us on Wednesday night. I appreciate your time. Thanks, Ryan. Take care.
Thank you too.